Okay, so I've been having a lot of conversations with private banking clients over the 2.5 weeks or so, and the recurring theme that I've been trying to reiterate to them is that we are dramatically shifting to a different market environment. So there's 3 main points I want to get across here in this video. Point number 1 is that after about 8 years or so of very accommodative central banking policy, easy money policy, the Fed and the ECB and even some other central banks are very clearly shifting away from that. It's not just a hunch, they're actually telling us they're doing that. Certainly the Fed has so far. That is going to, and there's no doubt in my mind, that is going to change the market environment. And what's going to happen, and happens every single time, is that people lose a lot of money because they're not prepared for it. They're used to just chasing a few stocks higher, but that's not going to work in that type of environment. So that is an overarching theme that we are working with advisory clients with, and certainly also members in the clubhouse. So if you want to join us in the clubhouse, for example, that would be a good opportunity to take advantage of this kind of thinking. Number 2 is the phenomena we've seen, and we see this every time in rampant bull markets, of people getting piled into certain types of low volatility product. One of the previous crises that we had, it was structured products and other sort of synthetic products that people were pushed into. And now we're seeing a lot of passive investing by the form of ETFs and sort of over-the-counter traded notes and things like that. What's going to happen ultimately, and what's happening right now as a result, is that a lot of people that are managing money right now are basically in charge of risk, but they're not being paid, or they don't have the knowledge to actually take risk. So risk is being sort of managed by people who are not, or don't know how to take risk, and that is a huge risk in and of itself. I think that's another thing that's going to come home to roost sooner or later, that active management is going to come back with a vengeance. A lot of people have kind of been poo-pooing the active management over the past few years. Makes sense, of course. The S&P 500 and other indices are just continuously going higher in a straight line, and ultimately that is going to end, and then a lot of people that are just only looking at passive investing are going to get hurt quite severely. And thirdly, and this is probably from a tactical perspective, the most important thing right now, is that a lot of people, and again, this happens in every cycle, are piled into just a few large cap stocks at this point. And we saw this happening in the year 2000 before the bubble burst there in the bubble. We saw it once again in a little bit of a different format, but the same basic idea in 2007. And we're once again seeing it right now. So the FANG stocks, these are not bad companies. I actually like these companies for the long term, the Facebooks and Netflixes and all those names and Amazons. But ultimately what's going to happen is that those stocks will relatively speaking correct more than the broader market when the market turns. And again, I'm not an alarmist here. I'm not trying to scare you out of your money, not at all. The reality is the markets are still going higher, so I'm not here to say sell all your stocks. But I'm trying to tell you that the markets are shifting slowly but surely. The right precautionary measurements need to be taken now and not when it's too late. So make sure you keep that in mind. So particularly people who are largely exposed to these large cap stocks, large cap tech stocks, which most people should be from a weighting perspective. Indices are tilted to large cap stocks, of course, being a larger weight of an index. So make sure there you're very careful. I would really make sure you start scaling out of some of the stocks, or at least hedge these things, because again, proportionally, they will correct quite a bit more than the broader market. So these are my top 3 things in my mind right now. I hope this makes sense, and I'll see you in the next video.